Hello, everyone, and welcome to this tax webinar and Q&A with Nate Albrecht, who is a CPA based here in the Twin Cities area. Today, Nate is here with me to just have a conversation about some of the new tax updates and things we should know about, as well as answer maybe a couple questions that the team and I have for him. So we can just jump kind of right into our main focus for the day. So I'll pass it over to Nate if you want to just start talking about some of the new Minnesota tax bill and anything you think clients should know relating to that.
Yeah, so there was a lot of activity, a flurry of activity at the end of the session last week. It includes some tax benefits and it includes some revenue raisers as far as additional increased taxes. So we'll start off kind of with some of the income tax benefits that are included in there. The big one that was people were talking about were these rebate checks. And once all of the legislation negotiation had been completed, the ending result is about a $260 rebate check for taxpayers, spouses, and up to 3 dependents. But it's not quite as generous as you'd think because there's an income cap. And so what's going to happen is the Department of Revenue is going to go through, look at everyone's 2021 income tax filings, and they will cut the checks. So they'll either do a direct deposit into the whatever account you used for your most recent refund, or they will mail you a check to the most recent address that they have on file based off of the 2021 information. All right. So it's a cliff phase out, which essentially says for a married filing joint taxpayer, the cliff is $150,000 of adjusted gross income. If you made $150,001, you get $0 of rebate check. If you made $150,000, you get the full rebate check. And for non-married filing joint taxpayers, it's a $75,000 cliff phase out. So it's going to be people are going to be talking about it. Some are going to get it, some aren't going to get it, and you might be making about the same amount of money. You just happen to trip over that cliff. There's going to be an option. The Department of Revenue doesn't have it up yet, but there's going to be an option that they've announced sometime this summer to early fall where you'll be able to log in and update your address and your bank account information so they don't have to chase those checks for you.
Okay.
So
Yeah.
I spent a lot of time talking about that, and it's definitely going to be beneficial to some people, and other people aren't going to see any benefit. Another tax benefit that they included is an expanded or a new child tax credit. It's very targeted towards lower income families. It's a $1,750 credit per child. But there's additional phase outs that's implemented with this, and it applies for the 2023 tax year. So once a married filing joint tax return, once their gross income exceeds $35,000, there's a phase out that gets imposed. And the phase out is 12% of the credit. What essentially ends up happening is once you get to about, for every $14,000, you lose the benefit of a kid. So it's $1,750 if you may, or $1,750 credit. If you make $35,000 in gross income, you're going to be eligible for the whole thing. If you made $50,000 in income, you're pretty much going to be phased out of one child, right? But if you have multiple children, you'll be able to get more. And that's going to be part of the 2023 income tax filing year. There's provision that allows the Department of Revenue to do an advance credit. So kind of like what they do on the federal side with the child tax credit. When you go in and figure out what your withholdings are, you can take this credit into account and reduce your income tax withheld on your paycheck. So essentially pay less in, and then the credit will fill up what you would have paid in at the end. So it's possible once they get it sorted out that you could adjust your withholdings and get some of that credit currently instead of having to wait until you file your income tax return. Okay. Another couple of little small benefits that may or may not impact people. There's the education credit's been expanded. Right now, you can get $1,000 credit if your income is low enough for K through 12 education expenses. That's getting bumped up to $1,500. They did expand the phase out on this. It used to phase out at $35,000. Now it phases out at $70,000. So it's possible people who weren't getting this benefit before and had to claim something called the education deduction, that they'd be able to claim this credit instead.
Mm-hmm.
And then the final one deals with the property tax credit for people who pay rent. It's called the renter's credit. Right now, it's filed on the same form and at the same time as people would file their property tax refunds. But starting in 2024, those renter's credits will be included as part of your income tax return. It won't be a separate filing, and that refund will be added to your individual income tax refund instead of having to wait until August and September when they've been issuing checks out for the, since the credit was enacted. So those are some of the beneficial things. There were some revenue raisers that were included in this. Probably the biggest thing that people heard about as it related to the elimination of the Social Security tax that was discussed. It was negotiated in the last session, and the House and the Senate had agreed essentially to eliminate taxation on Social Security. That didn't pass. Everyone thought that was going to be a slam dunk this year. It did not pass in that form. So what ended up happening is there is an income tax benefit on it. It's just not as generous as everybody had hoped. So if you're a taxpayer in Minnesota collecting Social Security, and part of your Social Security is taxed on the federal side, if your earnings, if you're a married filing joint taxpayer and your earnings are $100,000 or less, you'll pay no tax on Social Security. Minnesota will allow you to subtract whatever income tax the federal government is imposing on the Social Security taxes. If you make more than that, there's going to be a phase out as it relates to how much of that subtraction is going to be eligible. So essentially, if you're paying federal taxes on your Social Security, there is the potential to get a subtraction on part of that, which didn't exist before. One of the big things that kind of came in at the end was increase in the Minneapolis metro area, the 7-county area, of sales taxes. There's a 1% increase to the local sales tax base, which is going to bump it from about just under 8% to just under 9%. And that's 3/4 of a percentage point is going to go to transit. The other 1/4 percentage point is going to go to housing. That's set to be implemented this October. But that's a pretty significant sales tax increase, and I think that might catch some people by surprise. It moves Minnesota. If you look at the really high tax local jurisdictions throughout the country, we're probably just outside like the top 10% based off of that. So it's definitely going to be something people are going to be talking about. Mm-hmm. There's also a new income tax posed on investment earnings for people whose investment earnings exceed $1 million for the year. It mirrors what they do on the federal side. It's a 1% excise tax, so it's possible you'd have losses or other things to offset that and have $0 in taxable income, but you would still pay 1% of whatever earnings you've got from interest, dividends, capital gains that exceed $1 million. And then what else did they impose that was increases? There's a 50-cent delivery fee tax that's going to be, I think it's going to be implemented as part of the sales tax. So if you buy something that's going to be delivered, that's essentially taxable for sales tax purposes right now, and the total cost is $100. You're going to get charged another 50 cents essentially per delivery, and that includes clothing. So there's a little bit of a difference between the sales tax being implemented and this new delivery fee. So it's going to get a little complicated, right? So you're going to have sales tax based off the delivery. There's this delivery fee that's going to be charged, and there's going to be some challenges for people who maybe don't have a sophisticated sales tax team in their business on how to collect those taxes from their customers. Mm-hmm. That's kind of the highlights, I would say. It's been an interesting session. Things changed quite a bit at the end. There's still some major changes that were put in place in January for retroactive conformity. So Minnesota doesn't conform to everything, but in January of this year, the state legislature passed a bill which retroactively conformed a number of provisions going back to 2018. So for 2018, 19, 20, 21, if you had a significant adjustment between your federal tax return and your state tax return, you may want to consider filing an amendment. Most tax preparers are going to be charging to do that, so you have to balance like, oh, what's the benefit of what this potential refund might be compared to what's it going to cost me to go and comply it. But the Department of Revenue is not going to do automatic adjustments like they have for the last 3 or 4 retroactive tax bills. So I don't know if you remember, they would pass things in the spring that would apply to the previous year, and they'd say, oh, don't worry about it, we'll go back and adjust your tax return and send you a check. They're not going to do that for this one. And those amendments for 2018 and 19 need to be filed by the end of 2023 or the statute of limitations will close. So yeah, bunch of stuff.
Yes, a lot of new updates that I'm sure, yeah, clients will want to know about and have questions about. So thank you for that.
Yeah, only a few of these things are implemented in 2023, right? The sales
Yeah.
tax is 2023. That Social Security subtractions is 2023. The child tax credit and the rebate checks are 2023. A lot of the other stuff is 2024.
Okay. Yeah. So still got, yeah, another year or so.
Yeah, I don't think there's a special session. I mean, I think this is hopefully the rules that we have for a period of time until the next session starts.
Hmm. All right. Well, I know we have a couple of questions, maybe just generic tax questions
Sure.
that maybe we could cover. How many deductions do I claim on my W-4?
See, that's a great question. That's going to change with this new child tax credit. So Minnesota is going to have to come out with a new W-4 with the anticipation of maybe getting these done in advance. But 2018, the federal W-4 changed pretty significantly in that it eliminated the number of exemptions. Okay, it said, "Hey, are you single? Are you married? Does your spouse work?" And you have to answer those questions. And then ask, how many kids do you have that are eligible for the credit, the child tax credit? And then it would figure out what your W-4 is. And it got people pretty close. It caught a number of people by surprise that initial year because they just continued to say, oh, I'm married. Well, the way that chart works is if you say you're married, it assumes your spouse doesn't work unless you tell it to. And so when you think about how like the standard deduction went from $12,000 to $25,000, just the income tax alone, if you had 2 spouses that were working, and they both said they were married, and neither spouse said the other one works, when the way the chart works is it's going to assume you've got a $50,000 standard deduction versus a $25,000 standard deduction.
Hmm.
So Minnesota does not have a similar form. Minnesota uses kind of the historic form where you have to go in and indicate the number of exemptions that you're going to claim. And if you go through that chart, there's a generic one that says, oh, put in this number of exemptions for yourself, put this in if you only have one job, put this in if your spouse works, and then you would add additional dependency deductions. It's a more complicated calculation when you're itemizing your deductions, or if you have a spouse who is working and you have significantly different incomes. There's a whole section, like a worksheet that you'd go through that would ask a bunch of questions like, okay, what's your mortgage interest? What are your property taxes? How many children do you have? What is your spouse going to work? So if you go through that secondary calculation, it's going to get you much closer for Minnesota purposes. On the federal side, just update that form. Just make sure you're checking whether your spouse works or not. And that should get you pretty close, unless you have significant investment income or something that's not going to be running through your wages.
What is the new Minnesota tax minimum or required withholding?
I think what that question is relating to is when you're pulling retirement distributions out, there's a statutory rate that's suggested to be withheld, and I believe it's 6.25%, which is probably going to be a little bit high if that's your only source of income. Now remember, some people have all their withholding done on their retirement plans. You're not allowed to have state withholding done on your Social Security, so it's kind of all over the board. It's something where if your income doesn't change from one year to the next, you can kind of use the last year to target what that number is. And you should be able to, talk with your financial advisor to select the amount of withholdings you want to have done for state income tax purposes. And as long as you're within 10%, there's really no penalties or interest that are going to be imposed, as long as that withholding gets done and you pay the remainder at the extension time or when you file your return.
Okay. And I think one of the last questions that we had was, do you actually need a CPA to do your taxes? Or what about using something like TurboTax or other similar softwares like that?
So okay, there's all kinds of stuff going on here. I would say for a vast majority of taxpayers, an online service like TurboTax, the IRS is coming out. They're coming out with this new free file income tax form. It's going to be a pretty slick way to do it. I mean, TurboTax downloads your W-2s and your brokerage statements, depending upon who you're with, right? And if you're comfortable with answering the questions yes and no and going through it, it's going to do a good job of capturing everything. Where TurboTax probably lacks is in providing advice and planning. And that's where you talk to a CPA, your financial advisor. I mean, that's where you're going to want to seek counsel. How much money should I be pulling out of my retirement account? Because as you pull out additional funds, your Social Security might become more taxable. Right. If I've got a kid going off to college, right, who should claim the child tax credits? Those softwares aren't going to give you that type of advice. And that's where you'd want to talk to a tax professional. Hopefully they can give you enough planning where it's going to save you more than what the fee would be. But like anything else, it's personal choice. Like there's people who like to change their own oil in their vehicles, and other people like to take them in and get it serviced. And it's a service that's provided. But the more complicated your tax return is, it's probably a good idea to talk to a tax professional. There are great CPAs out there. I'm a CPA. It's a great profession. There are a lot of great tax professionals who aren't CPAs. So I think it's a relationship like you'd have with any other professional, a doctor, for example, where you want to be comfortable with the advice they're giving you and ask the questions that you want to get answered.
Yes. Yeah, exactly. I know. That's what I was just thinking. I was like, it would be a good idea to have, a relationship with like a CPA or someone to ask those questions and someone that can kind of help you and guide you along the way.
Versus, like going online and trying to find the answers. There's a bunch of
Yep.
terrible advice out there online as
Oh,
it
I know.
relates to this stuff. So
Can't always just Google everything, although it might seem like
well,
it.
you can, but you're going to end up with some probably bad advice.
Yep. Yeah, I agree. All right. Well, that kind of wraps up all the questions that I had for you, Nate. Did you have anything else that you wanted to add or mention before we sign off here?
I mean, no, I would say, the big thing to keep in mind is, we're in 2023. There's been a bunch of changes that have been imposed. The U.S. Congress is still in session. There may be more tax changes that are happening. And so we always have the ability to do some planning before year end. If you had questions, get them in before October, November, so you're not scrambling, because there have been a significant number of tax changes, probably going back to 2018 on the federal side, that people still aren't aware of. I mean, they just passed this big Secure Act 2, which impacts all the financial retirement stuff. That is definitely something to talk to your financial advisor about, and maybe include your CPA.
Yes, for sure. All right. Well, if any of you guys watching have any questions for either Nate or the Stein Financial Group team, I'll have all of the contact information in the description, or it's probably in the email too. So please don't hesitate to reach out. Thank you so much, Nate, for joining me today. I think we had a great conversation.
Yeah.
I know I learned a lot, and I know our clients will find this really
I've been
helpful
waiting
too.
for them to pass these tax bills, because you and I have been talking about this for a couple months.
Yep. Yes.
I'm like, well, we don't know what the rules are.
Exactly. So it's finally here, which is awesome. So thank you so much, and have a great rest of your day.
Yeah, you too.